After a really volatile final hour of trading, what's the last thing you want to hear in the overnight news? More banking problems. Deutsche Bank now. It's hitting not only the bank stocks, it's kind of hitting the whole market. We haven't seen that before. Can the flight to tech save us again? We'll find out. 8:35, Ryan Detrick's coming on, and man, that guy comes with some bullish stats. He is working feverishly right now to figure it out. It's Friday. It's the end of the week. Let's see if we can hold Monday's low. Let's get it going, Mitch.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders. The screen speaks for itself. Down 38.5 handles at 38.39.50. Buck is showing some strength, up 63 cents. The bonds, flight to quality, up $1.50 at 133.25. Ooh, that 134 area. That may force the Fed to do something. Who needs crude in a recession? Down 267 at 67.39. Gold just hanging out at 2K, up 330 at 1999.20. Silver finally waking up to the rally, up 12.9 cents at 23,370. And Bitcoin futures, well, they're going with the tech stocks today. They're down $760 at 27,790. Triple D, okay, let's say you were a college student right now.
Yeah.
Okay.
Yeah.
And if you were in a stock pitch competition, in the current market environment, you did your entry in, let's say, November, December. What stock would you pitch?
Nothing. I'm buying nothing. So maybe some gold. I don't even know. I think we're going into a world of pain here. And again, it's just because we keep getting more information. It's this information flow, but it depends on your time frame here, Joel. Like, what's your time frame?
Okay, and I just cut right to the chase, and then we'll get to the markets.
If you're trading, I'm buying nothing. If you're long-term investing, maybe you could pick up.
I am going to a stock pitch competition today.
Okay.
At the University of Michigan.
Okay.
From the grad school. And I'm going to be tweeting. I don't tweet a lot, but I'm going to be tweeting.
Can you go short?
No. 8 students. I'll just give a sneak preview of one of the stocks that's going to be presented, and I'll be tweeting out. But remember when I did that competition, or I did the broadcast from U of M? Remember that young lady, Brooke?
That was fun.
Yeah. Well, I went to dinner last night with them and talked to their stocks, and you know what stock she picked, and she's going to be presenting? Toll Brothers.
The home builders?
Yep.
Here's the problem. Again,
Wow.
I think they're value traps, but I'm so early. I've been so early on these calls. I mean, again, the Toll Brothers, the home builders, they've got low PEs. If you're just looking at it from a balance sheet perspective, you're like, wow, these things are cheap. But it's just like predicting where we're heading. And I think we're heading into an area that we don't want to be fully invested in, especially going into home building. I just think that's a terrible area to be going into, but I get the valuation. If you're just a number cruncher, CFA, looking at these numbers, predicting nothing about the future, like not looking ahead, just looking here, the home builders are cheap. But I just think they're cheap for a reason, and I think it's troublesome times ahead.
Okay. Well, there's 7 other people presenting. And,
what are you thinking about?
I'm not thinking about anything.
Well, you got to pick the stocks. You better find one.
Well,
I'll pick one, man.
Whatever they go with, there's going to be 8 of them. And,
go in the dumpster. Go find something, man. There's something down there.
I talked to one of them, and they said, "What are you buying?" And I said, T-bills. So I didn't want to.
That's what looks the best, man. Honestly. I think that's what
buying
looks best.
T-bills. There you go. Look
Yeah.
at the LT today. I know you covered it, but just put it on the screen.
What?
The TLT looks strong, man.
Yeah. Well, there's a reflection of 30-year bond, and just to let you know for the I logged into my long-term account for the last time to look at FRC yesterday.
the last time.
The
Yeah.
last time, as it's going to go eventually,
No,
probably.
I took Dennis. I know you don't give investment advice,
Mm.
but I took the loss. I took
Did
the
you?
loss. I took the loss like a man. Yeah.
I believe FRC. I'll say it on this show right now. I believe FRC is going to be a 0. That's what I believe. I may be wrong. I hope I'm wrong, but I believe it's going to be an FDIC bank, and there's going to be nothing left for shareholders. Unfortunately, that's what I believe. It's just not participating in any rallies. It's trying to break down new lows. The thing is $11. It's telling you there's problems. Unfortunately, I believe there's going to be a lot of other ones too. So I think we're going into a world of pain here. I think the Fed, I think when we're talking a month from now, I think that we could actually have to have those emergency cuts that I was somewhat joking about before. It's just not a good environment. And again, this S&P is so resilient because of tech, and it is giving everybody a chance to get out. If you get killed in this next crisis, if you're like, I didn't see this coming, you definitely haven't been listening to this show. This S&P has given so many chances to get the hell out of stocks. I, right now, and I've been saying this for a while, have the most cash that I think I've ever had. So I'm not sure at the market, but I'm sitting just with boatloads of cash. So, it's kicking up to like 65% now cash. So again, I'm getting paid to wait, and I just see so much risk. Yeah, we can go into tech stocks, and tech stocks been really well, but eventually that will cave.
Yeah, that's what we're seeing today.
Eventually the tech stocks cave too. So I think it's just a gift. I think the recent rally has been a gift. From the tape action, you've got to watch the banks. I mean, that's all that matters. And when these banks continue to go down, and now we have new news, Deutsche Bank looks like they're in now trouble here as well over in Europe. One of the big ones. I see Bank America. It's not as scary when it's just the regionals, but Bank America is breaking down to new lows every single day, it seems like now. Citigroup, Wells Fargo, Goldman's holding on a little bit, but approaching its lows as well. Morgan holding on a little bit, approaching its lows as well. I mean, these banks are just ugly. You cannot, people will tell you, they said on CNBC that you can rally without the banks. Yes, you can. If the banks aren't rallying, the market can still go. You cannot rally if the banks start to fail. That is the difference. The banks start to fail, you will not rally. So it's a matter of whether these banks are actually, some of these regionals are going to continue to fail, and then we're going to get contagion. So I just think we are setting up for financial crisis part 2. I do believe the Fed has the tools to take us out of it. So, I think that we're going to be okay, because I think that there will be emergency rate cuts once we start losing more banks. But I think there's some pain ahead here yet.
All right.
I think one other thing that's bothering the market too is just the indecisive. I mean, Powell comes out and says one thing, Yellen says another thing, and then she reverses what she says.
Oh, yeah.
I mean that is what the market doesn't like. The market.
Mitch, can you give us the Yellen comments from yesterday, because this is ridiculous. She exactly went opposite to what she said the day before.
Yeah, Yellen tried to reassure the public that deposits were safe again, promising firepower to battle any crisis, a day after she unnerved the market, saying that a blanket insurance of all deposits was not being considered. So which one is it? That's what happens here, right?
They had a talk with her after those comments and said, you need to take those comments back. So she completely reversed.
Yeah, literally. They called her in. They just said, hey, come into the
They did. Somebody talked with her before she talked again and said, you need to retract that statement, because the market doesn't want to hear this. And now everybody's just nervous. Now everybody's like, I don't know what to think. Are they lying to us? Like everybody is just more nervous here too. And it's just about the banks. I mean, nothing else matters here. You're going to see rip roaring rallies because people think that tech will continue to go higher. You're going to hear the bullish arguments here. But I will tell you, if we get, it's still an if we continue to get more bank failures or more bank bailouts, the market goes lower. So it's a big difference with the banks not rallying and the market going without it. And you see the charts where the XLF, we showed it, and then they were showing it on CNBC because they like to take our content. But the XLF, has gone nowhere since the financial crisis. So you can argue that, well, we don't need the banks. That's what the argument was on CNBC. We don't need the banks to continue to rally because the banks haven't rallied for the last 15 years. But you can't have bank failures. It's a big difference. Banks can stay here. That's fine. We could, if the banks stop and stay at these prices indefinitely, the market can continue and the NASDAQ can continue. We cannot have the banks continuing to go lower because then that's eventually going to scare people and it can eventually move into bank runs and eventually into bank failures. So that's the big difference is we cannot have more bank failures. Banks can stabilize. That's all it needs. They don't even need to rally. They just need to stop going down. But they have not stopped going down, which is why I continue to raise cash. Show me a reason that the banks are going to turn it all around. I will start buying stocks hand over fist. But
you know what? She's probably
and the market's not cheap.
Yeah, not at all. And it's kind of like when you were like in high school or junior high, and you did something wrong, and then all of a sudden over the loudspeaker, Joel Elconin, please report to the principal's office. And you're like, oh, they got me. And then you waited, and they said, Janet Yellen, Jerome Powell's on the line. Come to his office. That's exactly what happened.
And then when Joel made it to the office, he saw Mitch sitting right there already waiting.
Yeah.
You guys are in trouble, man. You too. I know that kind of trouble.
I had to sit with the principal one day, like literally the whole day. He made me sit next to him.
You guys were bad.
Quick story. This is a good one. I did something on a Friday with two other guys, and I'm not going to reveal what happened. And nothing happened on Friday. And on Monday, rumors would go around the school.
Joel got sick.
I got called down. And I go into the office, and the two guys I was with were walking out of the principal's office.
Uh-oh.
And I'm like,
trouble.
Rats.
Oh, man. They ratted.
They ratted you out,
right?
Boy.
No,
right.
Yeah, they totally
and this, the principal had always been wanting to get me, like always wanted to, suspend me. And it was like senior year.
What did you do?
I don't want to talk about it.
We're gonna talk about that. We're gonna talk about that.
It wasn't too illegal.
All right, I'll reel this back here.
No, but listen. But this is what I did. This is what I did. I said, no, I didn't.
Oh man.
I said, no. I go, what proof do you have? I go, this is Friday. And she was like, I'm going to suspend you. I'm going to suspend you. And I'm like, oh man, this is bad news.
Show me the proof.
My dad was already on me and stuff. So
that's hearsay what those guys said. That's hearsay.
Exactly.
I didn't do it. That's hearsay.
Yeah. And she said, okay, I'm not going to suspend you, but I want you to, to tell your parents about what happened and have your parents call me and tell me that you told them what happened. I'm like, okay. All right. So my dad's sleeping on the couch one night, and I'm like, hey, Dad, I got to tell you something that happened at school. And he goes, what? And I'm like, blah, 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 blah. And I go, you call Mrs. Sandlin and tell her that you told me? He's like, yeah, okay, bye. And then so he called. I don't even know if he ever called her, but yeah, that was.
Well, I can tell you the chat is loving taking turns on trying to figure out what the hell you did, Joel.
I'm scared.
I can't. I
just enjoyed
it was nothing super illegal. It wasn't
super illegal. Just a little bit illegal.
But yeah, let's get back to the
gambling
Fed action.
for sure. Something
no. Let's just go. Let's move on.
All right.
Well, I'm bringing us back to the Fed action. We're going to take a look at the Fed borrowing. You guys know I've been trying to bring some graphics, and I'll still give them a shout out. Reuters does really good on these graphics. So here's the Fed borrowing.
That's a ridiculous
turns. This is the credit crisis. Banks turn to the Fed for cash. Look at 2008. That went only up to like 110. Look at that line now.
I know.
That's
parabolic. They borrowed, but you know why they were rallying? They borrowed less this week than they borrowed the previous week, but they still borrowed a lot more.
That's bullish.
Yeah, because if you weigh inflation into there, it's probably like 300 or 600, right? I mean, that's a whole nother ball game. But one thing to mention here is, of course, the Fed's newly launched banking term funding program is moving up, right? It was at 0, just started. Now it's at $53.7 billion almost 5 times the outing of the previous week. And then also you're seeing now the Fed lending to foreign central banks. And this went from nothing on March 15 to now 60 billion. And so it just seems like the borrowing is just out of control right now. And that just shows me more and more that there could be more concern. I mean, these banks aren't borrowing for no reason,
No,
right?
they're borrowing to shore it up. They know that there's like potential liquidity crisis here coming for them. So they're all
And they're borrowing it like insane, like relatively
Insane
insanely
rates,
high
yeah.
rates. I know.
Yeah.
It's like sold the bottom and buying the top.
Yeah.
You know,
it's going to be disappointing for sure. Let's talk a little bit about the Deutsche Bank comments here, and let's get into more of that. Of course, it's falling this morning following a spike in credit default swaps on Thursday nights as the concerns of European bank persisted. Of course, if you guys take a look at those defaults, they were going up to 173 basis points on Thursday nights from 142 basis points the previous day. Of course, these were the bonds that were considered kind of we're going to get written down, right, by UBS decision. They had about 17 billions of bonds that were wiped out last weekend, right? And so this is where the concern comes. If you're in those bonds, do you step out of them? Because these are being written down to zero. So those investors are getting to the point where what do they make the decision on here? It's a very confusing situation because some investors really did get screwed in this situation.
Oh, I just think you look at the chart, you don't even need to know the individual stories and the breakdowns happening here. And the Credit Suisse deal is now in jeopardy, apparently. And you're just looking like, holy mackerel. We just don't need more problems. Yeah. We don't need more banking problems. Deutsche Bank is the biggest fish over there. So it's like equivalent to Bank America having problems here. I mean, it's huge. So you can't just, throw this in, this one will be okay. This one's embedded with everything. So, if we end up getting a situation where Deutsche Bank's got problems, we got big problems. So Deutsche Bank, they have been going down. They've had problems for a long time, but there hasn't been this worry about, bank failures, and obviously a lot of this has come to roost, maybe it started with the U.S. worrying and the worries of just, and then obviously the Europeans been saying, that's the reason the Credit Suisse was the tipping point, was the U.S. banking problems. And I mean, Credit Suisse had all kinds of problems before that. So it's nice to point the finger at us. And maybe that was the tipping point, but eventually it was going to happen. Deutsche Bank, maybe going down the same road here eventually. We don't know yet. We need more information, but just so many unknowns. The unquantifiable risk here in these markets makes me want to sell every single rally.
Yeah, and it doesn't look good either when we started to see some of these bigger banks just start breaking through the lows, right? Look at that Bank of America chart. That's looking
Bring them back to our banks.
Right?
No,
that's where
problems.
Yeah, that's not looking good. And I was looking at JPM seeing like maybe can we hold on to that 17th low, right? 125. Oh, boom, we're already below that too. So doesn't look good here, even in the fortress, right? Cramer's fortress, JPM. I don't know about these. I'm kind of starting to get to the point where, and you guys asked me yesterday, would I invest in any of these? And now definitely the answer is hell no.
No, right now I think, and again, I'm scared to invest even in anything in the market here right now because I just think it eventually brings everything down. But as I can continue to see, and I'm a broken record here, as I continue to see, and I tweeted like 5 times yesterday. People were probably annoyed with it, but we were rallying yesterday, and I'm like, it doesn't make any sense to be rallying here. This is just irrational exuberance. It's pure stupidity, really. Let's just pile into everything tech because we're going to be okay there. I think it's dumb money. I think eventually that caves too. Now, again, relative strength. So I'm long some tech stocks, and I'm short S&Ps against it because I keep playing this relative strength trade where I do think tech holds up better. But I mean, if the banks go boom, tech goes boom. Maybe it doesn't go down as far, but you still lose money if you're just flat out long. So I like the relative strength game, maybe owning tech relative to other things. But eventually, if the banking crisis gets ugly enough, it all goes down. And everybody
get some good news. Is there any good news out there? Let's look at gold.
I mean,
Netflix was good news yesterday, as long as you don't subscribe to it. Did you see the
I
Netflix
mean,
news yesterday? They're cracking down, not down in the U.S., but they're cracking down on the shared account.
is that why it was moving,
Yeah, that's
Dennis?
why it went up.
I thought
because
it was.
they're cracking
I thought it
down.
was the Apple content deal that it
No, they're
was helping
cracking
them
down
out.
on the shared accounts.
Th-
So
Does it
They've been
really
saying
work?
that for a long
I
time.
Yeah,
saw.
that's
yeah.
why I want to ask. I want to ask the chat, like, because our chat always knows things. Does it really work? Has anyone gotten hit with the password like block on Netflix?
They haven't started in the U.S. They said yet. So, but they are starting it elsewhere here. So basically, just experimenting here with cracking down on the shared passwords. So everybody thinks, well, everybody who's sharing, 5 accounts, all those people are going to subscribe to it too. There may be some truth to that. So I think that the subscribers probably do actually go up here. I don't understand why they ever allowed that anyways. But that was the main reason we were rallying yesterday for Netflix. So that was good news for shareholders. Not good news if you if you got an account and you're sharing it with 5 people. So now all of a sudden you got to be paying. You have to go buy your own account. I think eventually they're going to crack down on this though, in the U.S. as well.
Can't you use like some servers or something just to appear that you're like
I'm
in your
sure
home state
Mitch,
or
there's going to be
something like
scams
that?
to get around it. I'm sure
Come
there's going
on,
to be
man.
ways to get around it.
You know we figure it out here in the U.S.
We'll do a show on that, how to get around the Netflix sharing. Netflix
Oh,
will love that.
I have one on Hotwire that I don't tell anybody about, but that's why I use Hotwire. But let's get to some retail stocks. How about we talk a little bit about something else, right? It's not a
They'll look
positive
ugly too.
story, but yeah, will retail continue to get hit? I'm going to bring in Express earnings here, but we can take a look also at the major department stores. Let's get first through Express's earnings. They don't look good, and I've shopped at Express before, and I might be looking at some sales pretty soon. Loss of EPS 63-cent, beat the loss of 72-cent estimate. Sales of 514.3 million, missed 536.68 million estimate. And this is, of course, Express, the kind of, it's just an apparel goods. You guys can see them in every mall, I'm sure.
The stock is 78 cents.
Yeah.
This stock
This one went crazy with the meme stocks. Remember?
Oh yeah, I remember it was a meme-ster, and it was a
meme-ster.
Let's go back and look at those charts. Oh yeah, in 2020 when it went from 86 cents to $14. Holy, was that a gift? Those meme-sters give gifts, man.
Man,
I'm sorry to say, I believe this one is also a zero, or at least
Yeah.
a bankruptcy. Maybe it trades on the pinks.
What do you 14? That was EXPR, correct?
Yeah,
Yeah.
that's one we're
Yeah,
talking.
Oh, and that spike. Oh,
Yeah,
I
you
did.
see
Oh,
it?
You
That
see
was
it?
in the
Yeah,
GameStop
that's-
days.
oh,
Oh yeah, we're squeezing the
It didn't
too.
take long to come
was
down.
right
That's the
on that
problem.
crap.
it was right on that gray.
We
it
buy
was-
all
okay.
the crap and it squeezes, and we moon all the crap.
Oh man.
But
oh,
It
eventually-
all ended not that great.
Yeah,
but
it
it was
could come
fun while
down
it
like
lasted,
this.
at least for
Did
the memesters.
GameStop hold its gains?
It's held a lot of them.
No.
Yeah, it makes money now. That's impressive. No, it did. No, not from a couple days ago.
Yeah.
Cramer top ticked that. Did you see it? We'll give you a shout out, Jim. It was a really bad call. It might have been one of your worst calls in a long time. Jim does some okay calls sometimes, but he's been
tried
a
to
little
rally
bit
them.
cold lately. Again, I'm going to give Jim, and if you're listening, the producer who does Mad Money, this is the problem with Jim Cramer right now, is he is a momentum trader and winner in a contrarian market. He killed in 2020. Fantastic calls. But you cannot be a momentum trader in a contrarian market. He chases everything. GameStop was at $27. $27, and right before it opened, he says, "I think it can go higher." It went straight down. It was $27. The high tick was $27. He actually hit the high tick. He said it, and I was like, "Are you kidding me?" And it went straight down from there. So, I mean, this is the problem, though. This in a nutshell is being unwilling to change your strategies. So you have to adjust to your market. Cramer, unfortunately, is still doing momentum calls. Stock gaps up, he likes it. Stock goes down, he doesn't like it. We're in a contrarian market. It's fading moves that is what is making money this year. Fading moves. Contrarians are winning, not the momentum traders.
Dennis,
So producer for Mad Money, we know you listen. Tell Jim Cramer to stop making momentum calls. Move to a contrarian, and his calls will get much better.
We talked about this because that gray spike was in the pre-market, and one thing that I try and stress, I hope that people listen, is like, can you get to that pre-market high? Can you get it bid? Can you take it out? Or there's more of a chance of a fade. And Dennis, I just want to say one thing. He's on national television, right? And people, we have a little bit more freedom to talk about the market going in both directions. We don't have major
Very true.
spots. Yeah. And so he is handcuffed.
Very
He
true.
really is. And so he's really he's an entertainer. He's at an unfair advantage, because of what he does. And
But
all
again,
media,
but I'll
except
tell
for
you,
us.
Jim, though, most media is like that, Joel. But Jim, think about the financial crisis. Think about his epic rant. They don't know what they're doing. These banks are going to fail. These people are going to lose their jobs, and they know nothing. Remember that? So Jim is not afraid to make a bearish call here, too. I really believe that, and I've been a fan of Jim Cramer. He's one of the best entertainers. I've been a long-term Jim Cramer fan.
Maybe
I'm
the
just
only
saying
one.
right now he is struggling with his calls because he's sticking to momentum strategies. You got to be doing contrarian strategies. It's that simple. If he started making contrarian calls, all of a sudden that SJIM would probably start going down. So that's what he needs to do. He needs to be able to go to contrarian calls.
Is that catching on at all? How's the volume in that thing? I don't know if that's
it's light. They're light volume. Yeah.
Yeah, I've talked
you gotta
about
be careful
this.
trading the stuff.
Yeah.
Really
I've talked about it. Yeah, I've talked about that. It's just the spread is too thin. The spread is too wide. It's thin.
Yeah,
just be careful with those, team.
Yeah.
But I did want to bring this to like Macy's.
I heard
and
they're
JWN.
coming out with a DSJIM. That's a double.
The double short, Jim. Probably.
Maybe
it's at $11.
No. But what do you guys think about the other department stores, like the bigger ones, like Macy's, JWN, Kohl's? Will these get back down to pandemic levels?
Yeah,
I mean, look at Kohl's.
I know, and I'm long a little bit of Kohl's, and I shouldn't be. It's becoming a smaller and smaller position every single day, so that's the good thing. Not going to double down anytime soon. And yes, I do believe we're going down to the pandemic lows on most of these things. The problem is we were heading for a recession before these bank problems started.
Yeah.
Now, this is just the tipping point, which is going to kick us into the full recession. Soft landing, throw it out the window. It's not happening. Unless, well, maybe if they lose a couple more banks, they go to emergency rate cuts. When the emergency rate cuts start, maybe that's when you can start thinking about buying stocks. But then is there really problems? I don't know. So inflation is still here. I mean, this whole market is just set up so poorly right now. We can look at whatever statistics, and I know Ryan's going to come on here.
Yeah, what a day to have Ryan.
Yeah, and he brings us back, because Ryan comes with some great stats, and he can come and look, to previous history, obviously, and it's hopefully going to take me out of this bearish, rant and bearishness that I'm in. But I just think there's just too much risk. It all, for me, on every single thing, and for you too, Mitch, I know you talk about too, it's all risk return.
Yeah.
Well, when I see banks failures and zeros, I can't quantify the risk. So why am I going in and investing? And then I sit on the sidelines and I get paid 5% to do it. Not anymore. Now it's down to 4.6, 4.7. But I tied a lot of money up at 5.2. I mean, it's not bad. Again, you're losing to inflation, but I'm not losing.
Yeah, definitely. And I mean, you just said it earlier, right? We talked about it. You didn't even want to go buying anything. So let alone it might be time to sit on the sideline, right? I mean, that's just how it is right now. And I know that you've been raising cash, Dennis. Are you raising more cash?
Yeah, I have been into the rallies. I kind of puke when I look at I have this much cash here now, but at the same time, I'm like, I still see my portfolio going down too overall, which kind of sucks. It's like I'm right, but I'm long invested still 35%. So the 35% of stocks that I have is still going down. Now my trading account is doing fantastic, making new highs every day. But at the long-term investing, which only invests long, I'm just trying to be very conservative there because I just think we got a long ways to get out of the woods here.
The biggest gift I think that we've gotten in the last 3 months was that spike in JWN by Ryan Cohen. Oh my God.
Oh my gosh. Was that
what a gift. What a gift. It went to 27.
You never even got
15.
confirmation that he's in.
Yeah.
We never even got the confirmation.
I don't even think we got the confirmation.
I don't know if he ever was in. It might have just been a bad report. Can anybody confirm? Like, I never saw it go by.
Huh?
I don't even know
after that. Oh, man. If he didn't have it, well, I'm pretty sure he didn't jump back in it.
It went to like $30 after hours. So you won't see that on your chart. You'll see the high around 27, but it went to actually 30. That's how dumb people are. And this was dumb money chasing this. And again, man. I mean, I just don't get, like, the algos. Like, I don't know how some of these algos make money. Like, they're buying the thing up 30% because possibly Cohen, who screwed them all in Bed Bath & Beyond. Let's just say it, call it what it is.
Yeah.
Like, he got out and basically, and the thing went down, and he got out making all the money. I mean, he screwed everybody in Bed Bath.
I don't see
Beyond.
how that happens, man.
He did. He screwed everybody in Bed Bath & Beyond.
He's a good salesman, I'll tell you that much.
And then you're going to chase him for 30% JWM. You're going for it again. Fool me once, shame on you. Fool me twice, shame on me. So I don't get it at all either. I think these things are in a world of pain. He may be in there. We don't know. I don't think we've seen any confirmation that he's in there, though.
Yep.
Yeah, you know what we need? We need a facts checker. Who's going to be our facts checker? We need a facts checker.
Call him
part
up
of
and
the
ask him
show.
if he's in there. It doesn't even matter, though. These things are in a world of pain here. Again, to your point, are these retailers going to bounce back here? The only way they do is if we get the banking system stabilized and we actually have inflation in check and we start lowering rates. That's when the market starts rallying. How the hell do you get there? We're not even close. We have more problems today than we had a month ago or 2 months ago. But 2 months ago, they were only worried about inflation. Now we're worrying about bank failures. And you want to go and invest in this market?
Let's take a look at some data that we're getting in here. I didn't think it'd be the biggest data, but let's take a look there. Durable goods here, month over month for February, coming in at -1% versus 0.6% estimate. Prior was -4.5. Is it moving the markets, Joel?
A minor pop, but Dennis, if if I told you on Friday, we spoke over the weekend, and I told you all these things, we're gonna have. We had the Fed meeting, we have everything. Like, from the net change on Friday, where do you think? I mean, obviously
nowhere,
today's not
because
over
tech
with.
is holding us up.
Right, we're down. We're down. Last Friday's close was 39.47. We are actually trading 6 handles below that. That, to me, the tech. I mean, just keep your eye on the 5 stocks that we talk about all the time. If they don't, today's one of those days where, if those don't come to the rescue early, it's going to be one of those days.
They're already trying again, though. QQQ holding up very well here. So they're already trying again. Some of these techs. Meta is green here this morning, Joel. I mean, they're already trying.
TikTok.
Yeah, the TikTok stuff. But the other tech stocks are not down much. Apple's down 0.48%, not much. They're trying again, and they're going to keep trying. But eventually, I mean, these are your soldiers. This is what holds up the S&P. I just think eventually, though, they won't be able to do it. They can't do it by themselves. That's, what my thought process is. Again, I'd rather be in tech than banks right now. So I'd rather be there. But I don't want to. I'd rather just be in cash overall. So if I'm got to be in stocks, maybe I'm putting on. And again, I'm doing this long tech, short other things. Long tech, even short. IWM works really well today. So I mean, you can see where we're heading here. It's like the bank crisis looks like it's worsening. But I think if you're just flat out a long trader, I think you're just better to sit on the sidelines. If you're just a long trader. Now again, I'm long short. So I can position myself. I can take advantage of relative strength, which I'm trying to do here today. I think that's the way you trade this. It's been an excellent trading month. Technology, which we called on this show 2 weeks ago, that we thought that the money might actually start to go into tech as a safe haven. And it's exactly done that. But now it's just overextended too. I mean, we got Microsoft 25 times earnings sitting at 52-week highs almost.
Yeah,
it's
definitely
and
extended.
Again, full disclosure, I do actually have a Microsoft position on just my trading account. Again, I'm short other things against it though, just because I like the relative strength. And I take these trades off. I'm doing it every night, and I take these trades off around 10 o'clock, get flat, and I put the trades back on. But I've been biased to be buying tech and shorting other things against it, still staying market neutral.
Yeah. Just a few weeks ago, we were talking back when the market was trying to buy them at 3,800. We were saying if big tech could just stop going down, right? If we could just if it could just stabilize and stop going down, then we might have a chance of a rally. And now we're the complete opposite, where we're praying it to keep going up, and it has so far. But today will be a big test. You have your Friday, you have your weekly options expiration, you have your banking contagion, you have trepidation always over weekends. You have gold blasting over 2,000. So, all right, we've had 35 minutes almost of not positive talk, and I don't know how I schedule the guests like I do, but if there's not a great day to have Ryan Detrick on
Help
from
us.
CarsonGroup, today is the day.
Give us the bull
We
argument.
need
here.
it. And if he comes out bearish, I'm
Selling
hiding
everything
under my
if he comes
desk.
up bearish.
I will. I'm going to pull up my long-term account right now.
All
We're
right,
gonna
you
bring
guys
on
smash the
Ryan
like.
Detrick.
Let's get to our guest segment today. All right, welcome back, Ryan. They're waiting for you. Now let's have the questions and get some answers.
Well, first of all, how was that intro? Did you like
That
that?
was good. I was just saying, maybe I should just say, the world's ending.
Don't say it.
No, I'm not saying
The
that. I'm
algos
just
will run
joking.
on that. Ryan Dietrich just said it's now spreading through
Not-
Twitter like wildfire.
Not ending
No
yet.
Ryan Dietrich just
rumors,
said the
no
world is
rumors.
ending, and every algo is selling right now.
Fake
No,
news.
I want to say a positive thing for Ryan. Congratulations. You took your boys to see the Xavier game, right?
Yeah.
Yep.
Got it.
Xavier.
There it is.
Yep. X marks the spot. I don't have a team in the tournament anymore, so I'm cheering for your team. So congratulations on that. And what do you got in your bag of tricks, Ryan?
Yeah, well, we'll talk about Xavier just for a second. They do play at 9:45 Eastern time, and we'll see. We're going to run through the state of Texas. We've got Texas first, then maybe Houston. So who knows? The way they shot the ball against Pittsburgh, maybe they can get there. But anyway, good luck. I actually picked UConn. Anybody got anyone left? I'll start pulling my slides. I actually said UConn when it started. You guys got anybody left for the winner?
I am in 260 entries. I did more than one entry. I got Gonzaga, and I'm in 19th place. They eked it out against UCLA last night. But
Yeah, that was a good one. Okay.
Purdue turned out to be Purdue. But all right, come on. Where's the stats?
All right, here we go. You see my screen? I hope you should, right?
Yep, I got you.
Or a
Right
little
up.
brain teaser. You guys know what you call a small biologist?
What do you call them?
Well,
A microbiologist?
a microbiologist. There you go.
There you
The
go.
jokes, too.
I
This
saw
guy's
that on
awesome.
Twitter. I don't know. We'll start with that. Anyway. Yeah, I mean, just big picture. I mean, you guys had a great discussion there. Yes, tech is definitely holding things up. As of now, CarsonGroup, we don't think this is a systemic risk. We don't think this is going to spread. I mean, yeah, Deutsche Bank's in the news. Are you kidding me? Like, they've been in trouble for a while. So I know what's going on with financials and things. We'll get into some of this stuff, but I've shared this chart before. Now, believe me, I'm aware of this quarter. I think, at least as of last night, S&P's up about 4% for the year. Fully aware we're down about 1%. Who knows where today could go? And yes, a lot of that is because of tech, but still we're in that seasonally bullish time frame. When you look at a 4-year presidential cycle. So believe me, news trumps charts, everything that's going on, it moves things more. By the way, Janet Yellen, I think we need to just not let her talk anymore. I mean, I don't
no
know
more
how
yelling.
Janet Yellen, but I'm
No
not
more
gonna keep
yelling.
talking. Yeah, I mean, it's like yelling in a crowded theater or something.
Yeah,
I don't know what's
exactly.
going on. So,
Cry wolf.
yeah. So here's just the S&P the last 20 years. And I again, fully aware of what's going on here. We've had some bad Marches before. 2003, a 3-year bear market. A war started, a low March of 2003. Of course, we all remember March 2009. The world felt like it was really ending back then. And then March of 2020 when we shut down the world. So, again, just little bullet points. Yes, now this is skewed. The last 20 years as an average. Those 3 years made this look like that. But I think it's still important to know that we've had some really bad times before in March, and we have found a bottom, and we need some good news. Now, here's, you guys, maybe a guest already talked about this week. I'm not sure, but the Bank of America, I used to say Bank of America Merrill Lynch. It's no longer that. Just the Bank of America Global Fund Manager Survey. Not surprising. Investors are about as worried as they've been the past 20 years. Again, makes sense when you turn on TV and you see all the stuff that's going on. If you own some bank stocks, how you're feeling right now. But again, sentiment and expectations are very, very low. Now we need positive price action. We need things to turn around. I'm just saying there are some things out there with the seasonal March period of lows and over the top bearishness that could potentially spark it if we get some good news. I think I made 10 charts, so we're getting there. I mean, this is the big one, right? I know JC's been talking about this, a lot of other people, but XLF over 30. I looked this morning. We're at 30.50, I think. Now, know, that's the previous peak of the great financial crisis. If we were to violate that on a weekly close, sure, you know, that could be a warning sign that things could get worse. We're still flirting above 30, so I think we're not saying the world's about to end just yet with that above that very critical, important level. But boy, we're right there. And I just, March Madness again. This is March, I think, the last 20 years. Yeah. So the first half is rough. The second half is better. We have rallied the second half of March. We'll see what happens today, and we still have more time. I'm aware, but just kind of be aware that March. How do I want to put it? March starts like a lamb and leaves like a lion. Maybe I think I'm going to reverse how that works, but that's kind of how we see it. Like just a couple more, And again, this is one of those. It is what it is. I wouldn't want to ignore it. April is higher in a pre-election year for the S&P. 17 of the last 18 pre-election years. That's back to like World War II. 94% of the time, it's up 3.5% on average. I know March is pretty strong, and we are down 0.5% as of last night in the S&P on March. I know we're down more now. Month isn't over yet. You go both ways there. But again, just be aware that April is usually strong. And I know the way I like to use this stuff is if it doesn't work when it's supposed to, that's the warning sign, right? We had the Santa Claus rally. We had the rally in January. We had a lot of those things that kick off this year. As we remember, S&P up 8% or so around Valentine's Day, and then it's crashed. So that was supposed to happen. So what's supposed to happen is we're supposed to see some strength in April. So we'll see. We have a big sell-off. Then listen, that would obviously be quite concerning. We've got like two more. This is just a trifecta bullishness. I might have shared it with you last time, honestly, but I think it's important to remember. We rallied during Santa Claus, rallied the first 5 days, rallied during January. It is what it is. Normally, your years are higher, and we only were down three times. It'd be pretty rare to have a big sell-off this year. Now, lots of other factors, sure, but just kind of have that in the back of your head. You see your average entry year correction is about 10% or so. I don't think we've had quite a 10% correction this year yet. Looking at financials, but just on the S&P, but still, it's close to that. A couple big picture charts. I'm sure you guys talk about this. Gold. We do not have any exposure to gold. Well, I shouldn't say that. We're overweight commodities. We have some gold exposure. We're thinking about adding a little more gold exposure, not a ton, but just a little bit in some of the models we run for our CarsonGroup advisors. 12 years going up, 12 years going sideways, banking crisis, all that stuff. Dollar looks toppy. I've talked about that before. So that could be a bullish one. I'm sure you guys have been all over that. Then just Bitcoin, not a recommendation of Bitcoin, but I like to look at it like a liquidity function. Broke that 25,000 level just last week, and boom, I know it's down. I know cryptos are down today, but again, if the world were ending, I just think the dollar would be going stronger and cryptos would be going weaker. Now, sure, cryptos were created for this reason, banking crisis. So that's where it's like, talking about both sides of your mouth. I get it, but again, I think where I'd be more worried is the dollar started to soar, and I know there's some other countries that are trying to take away the dollar strength. We're just hearing about that lately, but I'll just put it like this: the dollar strengthens, that would make me a lot more worried that this is something bigger than just some really rough times with some scary headlines and some legit major drops, obviously, in those banks. I think I'm done. Oh, last one. And I've shared this before, but again, it's worth remembering. Midterm years last year, S&P pulls back. What do I have? 17.5% on average. So it's normal to have it. We had 25% bear market last year, obviously more than we probably expected, but it's not abnormal. A year off those lows. So I believe that'd be October 14th or 12th. I should know this. Whatever the October lows were, the average would be up 30% from there. We're not, I know that'd be a heck of a run from where we are right now by October, but just something to kind of be aware of. So I guess there we go. Those are my charts I threw together. We'll leave it on the microbiologist. Maybe I can stop sharing my screen.
So much information here. So much information here to digest.
I threw a lot.
And obviously, I've got the bear goggles on here, so I'm going to gravitate to the two charts of gold and Bitcoin. And both of those charts looked really bullish to me. It looks like the gold is ready to break out. It looks like Bitcoin is ready to break out. And I think, man, that's telling me that this banking crisis is probably going to worsen because people are looking to play defense, unless they're all just wrong, which, that can happen too. But I just think, if you're investing in gold, and to your point, Bitcoin was created for this reason. The Bitcoiners are right now, the crypto people are all telling me that this is, we were telling you this was coming. It is coming here. This is, the end of the banks, and we're all going to have to move to Bitcoin and crypto to protect.
Wait a second.
That's what I'm hearing on Twitter right now. What are you saying, Joel?
I want to interject here because I just started, looking at, like with that emphasis on Bitcoin. I mean, what do you think the total market cap of Bitcoin is?
The all crypto together was under $1 trillion. All of it.
Okay, right.
Well under it.
Right. So
So what,
Bitcoin,
400 billion? Guess 400 billion.
550 billion.
Okay, I'm not that far off. It's come
Okay.
up a bit.
What do you think the market cap of Apple is?
No, exactly. Bitcoin is a stock. Bitcoin is a stock.
Right.
But it's a stock that, a lot of people believe is a hedge against banks, a hedge against a banking crisis. And you know what? They're being proven right on this hedge against the banking crisis here. Bring it back to Ryan.
Yeah.
What are your thoughts? I mean, it's mixed messages here all over the place.
Yes, there
because
are.
we see Bitcoin going up, gold showing strength, which typically is not good for the markets when gold is showing strength. Tech holding up well, which is kind of a mixed message too, because usually when the market's tanking, tech isn't, but tech is a safe haven. I'm very, mixed even from your data here. Like some of it's looking bearish, but other stuff's holding up well. What's your overall thoughts here? Like when you take all this and try to put it into a package of like what you think or where you think we're going to be, what's your overall thoughts here?
Absolutely. One other thing I want to point out, so the Bitcoin and gold, I mean, bonds are doing what they're supposed to do, right? I mean, when stocks zig, bonds zag. I know we all talked about this last year, worst year since like Abraham Lincoln was the president or George Washington was president, whoever got the long-term data on bonds. We know stocks are down 20%. So it's nice, as someone who constructs portfolios and models for advisors, it's nice that we're getting that diversification that you're supposed to. We didn't last year from bonds. So that's a good thing. We still, from right this second to the end of the year, I mean, we're overweight equities. Yes. I mean, we think this is still, we don't think the end of the world's coming, more pain, maybe, but again, I don't want to get too fundamental in some of these things, but, we still see a strong consumer. Look at some of the recent housing data. I mean, I know everyone's talking about the recession. A year ago on April Fool's Day, cannot make this up. April Fool's Day is when the 2-10 yield curve inverted, right? And again, we're just not seeing signs of a recession yet. Now, I get the credit crunch that could be coming, likely is going to be coming, some of the potential slowdown that could be there. But you mentioned tech. I mean, semiconductors, right? Semiconductors made a 52-week high relative to the S&P, I believe a week ago today, last Friday. I looked at that. When you have that, and believe me, people can discuss this all day long. I think semiconductors are kind of like the new transports, right? They're in everything, right? They're everywhere. When that's happened the last 20 years, we haven't had a new 52-week high relative to the S&P on the SOX is what I should say. We've not had a recession 1 or 2 years later anytime. It happened 8 times. And you actually have outperformance, not surprisingly, from semiconductors, but the market does okay. So you've got the leadership from that group, or is it just the safety trade because, oh my goodness, we've got a banking crisis coming or here and a credit crunch, and there's less inflation, deflationary, less rate hikes. So that's more of a positive for technology. So like you said there, Dennis, it's more of a safety trade.
Yes.
I mean, it's maybe a little bit of both. Maybe 60% safety, 40% the world's not about to end. It's kind of how I think I'd put it. But bottom line with the models we run, we are still overweight equities. We definitely like industrials a lot, right? I mean, industrials, I know energy's pulled back a lot with the held up relative better than I think crude has done. So there's some areas that we do think there's some opportunity second half of this year. I mean, it's hard to think. I know industrials are down like everything, but a couple days ago, industrials are down 5% for the year, right? I mean, they're hanging in there, and it's hard to see a global recession when you've got things like Deere, Caterpillar, some of those other guys, hanging in there better. It's not been a fun, it was a fun start to the year until Valentine's Day. I don't know, but then it hasn't been fun since, but we just think there's still some opportunity in stocks. But it's nice to see bonds and gold and some of these diversification things doing what they're supposed to do when you have a well-diversified constructed portfolio.
One thing that I want to bring in here is I have a question on stagflation, right? It seems like the Fed is stopping their interest rate hike rates, and the inflation worry, yes, was still talked about, but it doesn't seem like the focus anymore. And we could still even have stagflation with low unemployment, right? If we just continue this drive, what's to keep us out of that?
Yeah, it's really interesting because last year's when we had the massive inflation and gold, didn't do all that much. Now inflation's coming back. I mean, that's kind of the bottom line. You look at some of the supply chain data that we're seeing, prices paid, time to delivery, just the PPI we saw, I think last Thursday, there's all these different signs. And then you look at like rents, right? And you look at housing prices. These things are coming back. These were the sticky parts of services that were why inflation's higher. So it's interesting. Inflation's coming back now. And now you got the credit crunch. We just had Jeremy Siegel. I've got a podcast, shameless plug, Facts versus Feelings. We had Jeremy Siegel on just 2 days ago. He said what just happened with SVB is equivalent to like 2 or 3 potential 25 basis point hikes because it's really putting the slowdown and the crunch on things. So again, and Jerome Powell said that so much on Wednesday that it's almost like doing some of the Fed's job. bottom line, though, yeah, the Fed's, I guess, got one more hike. I'm not so sure if I believe that, though, in the middle of a banking crisis. They're really going to do that in 6 weeks. But they're kind of done and out of the way, and inflation is coming back. But then the next question is, okay, well, is inflation coming back because they're about to head into a vicious recession? We'd say no. If it is, it's a mild recession, in our opinion. But those are some questions that are unique. And then the last thing on this, for the week, high yield bonds are up, not by a lot. And I know today's not over. I get it. But again, if the world were ending, I think high yield and junk would probably be a good deal weaker. So those are just some kind of little tidbits that caught me on Wednesday when everything got killed after Yellen kind of opened her mouth about the 25,000, or I'm sorry, 250,000, not even looking at it. High yield was actually up only by like 2 or 3 pennies, but it was still up on Wednesday. That was one that caught my attention given the bloodbath we saw Wednesday.
Ryan, and I hear this all the time. Why does it have to be a mild recession and not like a vicious, why does it have to be mild? Everybody keeps saying, I think we're going into a mild recession. Is this just to calm like people down? Like, why? Why does it have to be? I mean, we've been printing money nonstop. The Fed has been the printing press is going off the charts here for 15 bloody years. Yeah. And, we're throwing more money at the problem. The financial crisis, we think, we saw that. No, we just threw more money at the problem. Printing. And now we have inflation, going back to even what like a Peter Schiff would say, eventually catches up with prices starting to go up. And now we've, it's COVID that kickstarted that. But, when they all of a sudden, they turn off the printing presses, and I guess they're just going to turn it back on again. Is that why? Is that why? Because if we do start going to recession, they just turn on the printing press to make it better here? Maybe I answered my own question. Why does it have to be mild?
Interesting takes there. I mean, I think it's to us, when we look at the consumer, I mean, the consumers aren't strapping. You look at credit cards. They're still out there spending. So we could dip into a recession, but consumer is in better shape. Corporate America is not nearly as leveraged as they were 15 years ago before, financial crisis. So the leverage isn't quite the same in the system to us. So that's kind of why if we had a recession, it wouldn't be like that. And maybe it could be like a 1990 recession. By the time it's almost over, everybody looks around. And here's the other thing, and Professor Siegel pointed this out. We did have 2 quarters of negative GDP last year, all right? We all grew up in college and they'd say, oh, that's a recession. Yeah. So maybe we kind of had one last year in the rolling recession. You got a friend in the mortgage industry. There's been parts of this economy that clearly have had a recession. Manufacturing was in one. We think it's bottoming now with China reopening. But still, we maybe had a minor recession last year. But by the book, whoever calls it, I forget who it is, NBER, they didn't call it. So really interesting. One final thing, though, you look at earnings. I mean, earnings are the big thing. A weak dollar historically kind of helps those multinationals, right? It was about a 5 to 6% headwind to earnings last year. Dollar's going weaker. That could be one potential positive. You look at what companies have said the last couple of months. Actually, earnings I think it's like 62 or 63% S&P 500 companies have actually increased their earnings guidance the next 12 months. That's something not too many people are talking about. Not by a lot. I'm not saying they're just going hog wild here, but I just keep hearing how bad earnings are going to be. But you look at what corporate America is saying, and it could change, sure. But what they're saying is not what people are, what I'm hearing about on TV so much.
Now, my question would go now to unemployment. Are we going to see a spike here? Because, of course, that's what the Fed's intention has been in the first place. And everyone's been talking about the loss of jobs. We really haven't seen it showed up. Are we going to start seeing the unemployment spike? What do you feel about that, Ryan?
Yeah, I think you have to with the credit crunch and things. And then you see the last week's initial claims. I think it was 191,000. Don't quote me, but it was lower than expected. We're not seeing it in claims yet. But I think with everything going on and the different layoffs, there's probably going to be a little we had a little bit of a tick up in unemployment. But again, are we going to go from sub 4 to up over 7 or 8 real fast? We'd say no. I mean, I don't think so. I think these things are still fairly strong. You look at companies. Yes, we hear about all the big layoffs, and we all know about it and talk about it. You mentioned, I think Facebook, Meta, whatever you call it, is up. They've been laying people off, but there are a lot of companies that are still hiring too. I mean, leisure, hospitality, those areas are hiring, so it's not so clear cut. But I think with everything going on, sure, a little bit of a tick higher in unemployment rate makes some sense to us.
All right. Well, thank you for joining us. Like always, you guys can check out everything Ryan Detrick does, and definitely keep him on Twitter. He's definitely a great follow, puts up some great tweets every now and then. So you guys keep up with all the statistics. CarsonGroup, appreciate you coming on. Chief Market Strategist.
Thanks,
I'll
Ryan.
be back.
I will be talking about a lot of Xavier basketball tonight. So if you don't like Xavier basketball, don't follow my tweets, but we'll see. But guys, thanks for having me.
Thanks,
I appreciate the opportunity. Bye-bye.
Yeah, and check out that podcast. I checked it out. It's pretty good, Ryan. Appreciate it.
Thank you. Yep. See you guys.
Right.
All right, we got a rally going on here. We are 12 handles off the pre-market low. We
did the overnight cut down, right? This usually happens.
Yeah, We are back above the low from yesterday. Trying to give some
Yeah.
positives here. I think the real thing and the real onus on the Bulls today, and a lot of times, I think we can go green on the session. Oh boy. 39.78. That was your closer. That's still almost 30 handles away. That's going to take some pretty heavy lifting. Obviously, it can be done. That is the second lowest close we've had since we peaked in February. The actual lowest close, or excuse me, it's the third lowest close. We hit 39 and a quarter last week, 39.47. So if you want to sleep good over the weekend, getting back over 39.78, closing over that would be, to me, would be a win for the Bulls.
Why are we rallying?
Why are we rallying? Because
It's a softball up the middle to everyone. Why are we rallying right now?
It's probably like some tech names.
There you go. It's
There you go.
tech.
It's tech
Meta's up
holding
$2
it, right?
here now. Netflix has went to the green here. Amazon down
Rotation
a little
station.
bit. Apple's trying to go up to the green here. Why are we rallying? It is tech. Once again, they come in. People are getting to their money. Managers are getting to their desk at 8:30 because they don't get there until then. That's the people managing your money. They get there much later than the real traders. They get there and they're like, what are we going to buy? Well, we better buy some tech stocks. They're down here today. So, I mean, this is, now turning. You can see from the morning. Bring it up. You can see the turn in all of these charts here. Bring up Netflix pre-market chart.
I
It's
think
down all morning. Now it's up.
well, they got to buy something, right?
That's it. And this is why you don't have to panic and just sell at the lows. You're going to get a rally, raise cash into the rallies, raise cash into the rallies, raise cash into the rallies. Don't sell the dip, sell the rips. But we keep getting rips. And every time we get significant rips, I'm usually on my Twitter, talking about, a little bit of bearishness to try to tell you that this is the time. Boom. We're not in like a COVID where you got to sell dips because we're going a hell of a lot lower tomorrow. It's been choppy the whole time. So you don't have to panic out here.
Look what it did
but
yesterday.
I think when we look where we are a month from now, I think we will be significantly lower. So that's why I think you continue to raise cash into the rallies. But again, to Ryan's point, the SMH making new relative highs relative to the S&P, of course it is. What have we been talking about is relative strength. That will continue to happen, in my opinion. Tech will outperform this market, in my opinion. But it doesn't mean that it has to go up. If the market's going down, it just doesn't have to go down as much, and it outperforms. So keep that in mind here, too. I believe that we are entering a tougher period for stocks as a whole, but I do believe that tech continues to outperform.
One thing that Rob Friesen of Stock Odds points out time after time again, you more get, off big down opens, a much higher percentage of you get big pops, right?
Yeah.
And, buying the dip, obviously, in a bull market, as opposed to when you get these, 40 handle up opens and you're trying to fade that open. A lot of times you get run over first before. And it's just a tendency of, of money managers. It's that, it's the market structure, buying the dips on days like this is, I mean, you can lean on the pre-market low. I mean, now now you got to be thinking to yourself, I missed the dip. The low is in. We're 20 now we're 21 handles away. The complexion just changes. And you're right. The money managers, they got to start. Well, what they do is they listen to pre-market prep in their car on the way to work.
That's what is.
And then when they get to work, they don't even have to, they go to their board meetings and they say, well, I think we need to buy tech today. And they don't say they listen to pre-market prep. But anyways, mid-range on the session is now not that far away, 67.50. And then I'll give the number that they, if we get a sustained bid over 39.78, that's the closing price, then I'll get rid of the Netflix chart here. We got a chance. We'll see. The low
we
on
have
Monday,
lots of chances to rally here. That's just it. I mean, we can be as bearish as we want, but there's chop ahead. This isn't going straight down.
been.
But I think the news flow, and my job as a trader is to predict, not to look at charts and try to predict the future from charts. You make more money trying to predict the next headline. Get ahead of the headlines. You know what I believe in the next 2 to 3 weeks is more bank failures. What does that equal? Probably lower markets, especially on banks. So, I mean, I'm absolutely not buying any banks here right now. unless we get new information where maybe, the Fed's coming in, emergency rate cuts. I said if that happens, I'd start to turn around and get bullish because I think that solves the problem. But until I start to see that, I don't see a reason to just turn around here and start just buying stocks. So
all right, I'm gonna hop over, cover some more stocks on pre-market prep plus. We didn't get a ton in today, a lot of macro talk. No pre-market prep with stock odds today, and there'll be no closing print. You guys are gonna have to guide yourself into that closing print. I'll be up
goodness, what
in
are we
Ann
gonna do about
Arbor.
that?
I'll be what'd you say?
What are we gonna do without that?
You guys forget they got the swing trader Mitch.
Okay, Mitch, we're going to you
Flex.
today. Get in there,
Flexi
flex.
flex.
Dennis, you know what? I'm going to teach you how to do it, and you're going to run it, and you can Dennis, because you could talk for
I could
a
talk
half.
for a long time.
Yeah, you could talk for a half hour.
I know.
Okay,
I was always
all right.
told I
Swing
talked too much.
trade, baby.
Everyone, have a good day.
All right, let's get to the action. Let's go to the stocks to watch. TradeZero segment. We're a little late on it, so we'll try to run right through it, team. Let's get to the action. All right, first one up. That's an interesting one. Making a move is Activision. What's going on here, Dennis? You know anything why this is up today?
No, actually, this is nice to come into this segment so we can see what is actually moving. I have not looked. It's got to be some, something with the
There
deal.
has
I
to
would
be
assume.
something. I didn't catch this earlier.
Let's go see what the news here is on ATVI because it's definitely news. UK CMA provisionally concluded that anticipated acquisition by Microsoft Activision will not result in a substantial lessening of competition. So the UK looks like they will approve the deal. Now, again, this is when the deal is done, but it means it gets closer. We know that 95 is it 95 is the price that's on the table here for Microsoft. So there's still another $11 there. Still some concern, but this sounds more like, oh, maybe, this deal does get done at 95. So that's why ATVI is trading higher.
Interesting to see that. We'll find out what happens in that deal. Of course, they still need to go through regulators here, but not a bad move there. Nice spike. It got up to a high of 86.03 today. So might be in play today. We'll find out what happens there. Let's keep going. Of course, one thing that I do see here is drip. Drip is the leverage play to the bear side for oil. Just want to mention the oil news, of course. At least oil has been edging lower after Thursday's comments that they wouldn't refill the strategic petroleum reserves. And this was stated by the Energy Secretary, Jennifer Golhem, and she also stated that it might take several years to fill that back up. What do you think about that, Dennis, and the oil trade?
It's all oil is moving is with the banks overall here. Again, it's I've actually been starting to pair trade XLE with IWM, believe it or not.
Wow.
Because right now it's just moving. Again, lots of debt in these companies. Banking crisis hits oil for sure. So there's a positive correlation between the banks and oil. It's not going to move as much at the banks, but what oil needs is stabilization in the banks. I know as people are say you're nuts. It's nothing to do with it. It has everything to do with it. They borrow a lot of money from the banks. Oil companies are heavily indebted. They don't want capital crunch. If we get in a banking crisis, capital and obviously gets tighter there, and credit gets tighter there. So there is definitely a correlation there with oil and the banks.
All right, I'm seeing GDX here. That'll be like kind of the last comment. The gold trade. Do you think this trade can continue? The gold one?
Yes, I do. Yeah. I think I'm a gold bug here right now. Again, buying pullbacks, not buying reps.
Yeah,
so
of course.
You get a pullback here. You got a pullback 3 days ago. I think gold continues higher here. It's the safety trade. It's the Bitcoin and gold moving here together. I think Bitcoin can continue higher here too. The banking crisis worsens. It's probably good for Bitcoin. It's probably good for gold. And I do predict that the banking crisis is going to worsen.
Well, you bull oil traders, I will say it again, man. I'm not betting that natural gas is coming back, but also getting hit big today. JKS here, of course, the China solar name. Do you think that the solar trade could turn around, especially if the energy trade turns around?
Yeah, I mean, solar has always had a positive correlation with oil. It's the alternative energy, but as oil prices go up, relatively speaking, the solar becomes cheaper, which can obviously move the prices up as well. So there's always a loose correlation there with oil actually positively correlated with solar. I'm not buying any Chinese companies. Maybe I should have been because they're starting to look better, but I'm just concerned with the geopolitical risk. Again, you can see what I avoid things when I can't quantify the risk. I'm
Exactly.
a risk reward trader. I look at risk first and then look at the return and extrapolate whether I can trade it from there. If I can't quantify the risk, the trade idea stops right there. I can't
100%
quantify the
agree.
risk on China stocks. I can't quantify the risk on banks, which means if I'm going to trade them, they've got to be hedged. I'm not taking directional bets when I can't quantify the risk.
I love it there. And just to kind of mention, still short on the Chevron, and that's going lower here. I looked
Nice,
for the
Mitch.
gap fill. The gap filled already
Perfect
yesterday.
timing on that short too, buddy.
Yeah, I'm just trying to be. You know what it was, Dennis, is that I actually remember I played it here on the down move, sold that down move, and then was looking for the bounce to get back into the name. Something that I feel like this market is giving us a lot of opportunities on. It's like this isn't the sell the rip, but in this case, more like, sell the down move, right? Cover the down move and then look for the bounce to get re-short. That's been working out for me because I just feel like this market is so chop. Even when you get that first swing down, a lot of times you're getting these bounces back up. So just be careful out there. We'll see what happens on the oil trade. And just to give the last one that I have there, full disclosure, I also have XOM, ExxonMobil, 105.79, was able to take some profit yesterday. Going to look for this to continue down and maybe even getting into the double digits. We'll find out. Big part for me is just watching the XLE. Do we crack through this 75.36 low? If that continues to crack, now I really start seeing XLE like it's really starting to look broken. We'll find out what happens in the oil trade. All right, that's going to probably do it for me here on
What was down big here?
You could see also
JKS, coin. We know the coin. This is
oil,
continuation.
Coin showing up.
Yeah, coin's down again here. This is continuation from the Wells.
From the Wells report. Just to mention, Kathy did buy some more, but we won't get into that conversation. Boeing showing up here. Boeing and Caterpillar. So that
Boeing and
industrial
Caterpillar just kind
trade
of moving with the overall market here too. Remember, we just rallied. Sometimes the stocks haven't ticked higher here too. So
yeah,
Berkby, Adobe, these are all just market moves here that are moving these things.
And we'll see if the industrial trade actually turns around, right? It has been pulling back. We'll keep an eye on it. Like always, you guys can check out the extensive inventory of short locates through TradeZero. I'll give you guys the link right here, and we'll wrap up. Any last comments for you, Dennis, before we get
caution selling into strength? So we will get more reps. We will get more rallies. We will have more hope. And I think those are selling opportunities. That is just my opinion.
All right, that's going to do it for us. Have a good day, Dennis. We'll bring you back on like always, and have a good weekend. Hope the family gets all nice and healthy this weekend.
Man, we've been fighting
Shout out
bugs,
to you guys.
COVID, fighting everything over here. So
prayers for my man Dennis's family getting healthy.
We need to get healthy.
Definitely. I'm ruining it for you, Dennis. Have a good trading day. Go do what you do best, my friend. All right, Dennis is getting into his trading action. You guys keep up with all the action right here, of course, on Benzinga. We got live trading coming up next. We're going to keep going into some other action. And of course, TradeZero sponsoring it today. So give them a shout out. Check them out. Threw up the link there. You guys can always check out TradeZero for some extensive inventory on short locates, and check out their TradeZero flagship software. That's going to do it for us. And of course, don't miss this weekend. Going to continue pushing forward. Japanese candlestick trading techniques. And what I like that we're talking about right now, we're going to be getting into reversal patterns. And this market has been giving some reversal patterns. I even took a trade yesterday on SOX S based on that reversal pattern. And we're going to actually pull the recording from that on the stream so that you guys can check out exactly how we attack one of these reversals. Japanese candlestick charting techniques. A lot of you guys reaching out for this book. So definitely check it out. Even if you're not in the book club and you just like technicals and you want to read a good book, definitely check it out. It's one of my favorites when I go into candlesticks, but give the thumbs up. We'll see you next time. I'll throw the book link there in the chat one more time. And let's get you guys over to live trading action as I'm ready to go ahead and keep swinging. We'll find out what happens. And like always, if you guys want to catch a swing trading show where you guys see me taking these kind of oil trades, right? Well, come to Start Swing Trading every single day from 3 to 4 p.m. Eastern. We take a look into the market, try to bring up some setups, take a look at what's moving out there, what was hot, what was not, and of course, bring on traders that take a look into the market on their setups. We'll see you guys over to live trading now. Let's see what Lord Ryan and I can get into and see if we can get some of that money today. Smash the like, team. Let's keep it going.